Welcome back to the channel, everyone. Today I want to talk about the Department of Justice investigating Melvin Capital. Now you might say, well Tom, that sounds like a very clickbait title, but actually Melvin Capital have been specifically named in the Department of Justice investigation. So stay tuned and let's make some money. Today I want to talk about why the Department of Justice are investigating Melvin Capital. I also want to talk about what that means for Melvin and what their investors might do when they find out that Melvin is being investigated. I then want to talk about what might happen to Melvin Capital when their investors take certain actions and what that means for the AMC squeeze. And now I want to dive straight in with the key information. So, to start us off, Lucy Commissar has tweeted saying naked shorts. US criminal authorities are gathering information on contacts among dozens of short-selling hedge funds and research outfits as they investigate possible trading abuses, includes Melvin. So if we head on over to this Financial Times article, it says the Department of Justice has sent subpoenas asking for information about a list of more than 24 firms to a smaller group of market participants. Among other things, they are asking for calendar information and communications. So basically the Department of Justice is asking many hedge funds in the field whether they've had communication with some of their listed 24 hedge funds or 24 short sellers. So basically the Department of Justice is asking hedge funds in the market, such as Citadel, what kind of communication they've had with Melvin Capital. It says the list of names includes some of the best known firms that publish negative research and funds that seek to profit when individual share prices fall. Among them are Muddy Waters, Melvin Capital, Hindenburg Research and Citron Research as well. Now obviously this is just a list of 4 firms, but so far the Department of Justice list includes 24 firms and is also incomplete, and they plan to investigate more. It says the DOJ and the SEC, who bring civil market manipulation cases, appear to be looking at whether the firms are coordinating or acting in a way that violates securities laws. Now this is something we know is happening. We know that Citadel and Melvin Capital and many other short hedge funds currently shorting AMC are coordinating and working together. We know that there has to be coordination between hedge funds and market makers in order to create those synthetic shares and in order to perform naked shorting. Now I think this is a really big deal. When this lawsuit dropped, I thought the SEC and the DOJ were just investigating short-selling research firms like Hindenburg Research. But actually it now seems that the DOJ are actually investigating firms like hedge funds and market makers that are actually coordinating and working together. Now I also think this is good because obviously the SEC can only bring civil market manipulation cases, whereas the DOJ can bring criminal market manipulation cases. Meaning the SEC don't actually have the power to arrest and imprison anyone, and obviously the SEC have taken a look at what's here and they think people need to go to jail and they think the DOJ needs to get involved. Guys, if you're worried about holding your AMC in Fidelity due to all the recent glitches and the fact that Fidelity actually supports short sellers, Moomoo are currently buying and giving you a free share of AMC on top of their usual 5 free shares when you sign up to Moomoo using the link in the description below and make your first deposit. When you sign up to Moomoo and make your first deposit, you get 2 free shares valued up to $3,500 each. If you can deposit $100, Moomoo will also buy you a free share of AMC. And guys, if you can deposit the full $2,000, then you also get 3 free shares on top of that, worth $3,500 each. Moomoo is also a brilliant commission-free trading platform that doesn't make its money from payment for order flow. Moomoo and Futu make their money from margin interest and from payment fees, and therefore you don't have to worry about your trades going through sketchy dark pools or being given to Citadel. Moomoo also has excellent technical indicators and advanced charting tools. Moomoo also publishes daily short-selling data on top of a number of other key indicators. And therefore you can currently get up to $17,500 in free stocks and a free share of AMC just for signing up with Moomoo using the link in the description below. And as Corey says, to everyone asking me my thoughts on names released by the DOJ, let me say this. Obviously, Corey doesn't work at the Department of Justice, but you never release names at the beginning of an investigation. You only release names near the end of an investigation, purposely to watch what they do and where or who they run to. Now that Melvin Capital have been named in the Department of Justice investigation and probe, it will be very, very interesting to see how Melvin Capital and Gabe Plotkin react and whether they run to Griffin and Citadel for advice. Obviously, we know that Melvin Capital and Citadel, aka Ken Griffin, are working together in order to create these synthetic shares and in order to naked short AMC shares. Now you may say, well Tom, wasn't this Department of Justice investigation only released a few months ago at the back end of the autumn or in the beginning of the winter? Doesn't that mean it's going to take many, many months, if not a year or two, to perform this investigation and actually make some arrests? But as Unusual Wales tweeted, breaking news. Andrew Left, the founder of Citron Research, who famously shorted GameStop, actually had his computers seized from his home in early 2021 due to the FBI investigation into short selling. Now, I'm not sure if this means Department of Justice investigation or whether the FBI are also involved and also performing their own investigation. But it's interesting to see that actually Andrew Left and some other short sellers have had computers seized not in early 2022, but in early 2021. And therefore, it seems the FBI, the Department of Justice, and the SEC have actually already been investigating short sellers for well over a year. And therefore, as Corey said, maybe they're not at the beginning of this investigation. They've obviously been investigated for a year, and they're now actually arriving at the closing point of the investigation, and they're waiting to see who else is affiliated. Obviously, Charles Gasparino said, correction, neither Citadel nor its associated hedge fund is on the aforementioned list. Sorry for the confusion, but Citadel knew what I was saying and have no comment. But as Stonks Batman said, technically some of Citadel's colleagues, such as Melvin Capital, are currently named on the list, and therefore it's likely not long until Citadel is named on the list as well, especially because the Department of Justice stated their list is not yet complete. And there's another tweet that says they will announce that Citadel Securities is under investigation soon enough. I said it months ago. They are building a case, and feds do not announce their endgame, no matter what pathetic, pathologic lies from Fox Business say. Now we wait. Now obviously I think this is brilliant that Melvin Capital have actually been named in the Department of Justice investigation into short sellers, but I wonder what that means for their investors, and I wonder what that means for Melvin Capital. If you personally were invested into Melvin Capital and you just found out they were being investigated for fraud and market manipulation, what would you do? Now there may actually be some of you that watch my video that were invested into Enron before they went under and before they were found out for all of the fraud that they were committing. If you were invested into Enron, you'll know that you probably lost most, if not all of your money. And therefore, if I was invested into Melvin Capital right now and I had just found out that they were being investigated for fraud, I would probably be trying to pull my money out as fast as humanly possible. And I'm sure that I wouldn't be the only investor that would also be trying to pull their money out all at the same time. Now obviously, if lots of Melvin Capital investors want to withdraw their money, then Melvin Capital are going to have to sell off some of their assets in order to meet those withdrawals. Now that's obviously going to cause lots of these stocks to crash, which obviously means that Melvin Capital are going to struggle to meet their margin requirements as those stock prices fall and as their cash balance reduces more and more because of those investor withdrawals. Now actually, just thinking of it, you'll know the other day in my video I spoke about how Melvin Capital were heavily invested into Snapchat, Meta Platforms or Facebook, and Block or Square. Now you remember that these stocks saw massive losses on the Thursday and the Friday, with Facebook at one point down nearly 26%. Maybe that was actually a sign of Melvin Capital selling off massive blocks of Facebook in order to meet those investor withdrawal requirements. When they sold off massive chunks of Facebook, obviously the Facebook stock started to crash because of all these giant Melvin sell orders. As more and more investors want to withdraw their money from Melvin Capital, Melvin will have to start selling off more and more of their positions and may even have to cover their AMC shorts. Obviously, covering their AMC shorts isn't going to be Melvin Capital's first priority because that's the position that would end up bankrupting them. It's more of a last resort play, but if so many investors do withdraw from Melvin and they get margin called, they will be forced to cover their AMC shorts. And obviously when Melvin are forced to cover their shorts, that'll obviously skyrocket the price of AMC due to Melvin holding such a large short position in AMC. And then obviously as AMC starts to skyrocket, when Melvin Capital covers, that'll obviously cause many other hedge funds to be required to cover their AMC shorts as well. Because obviously as the price of AMC starts to skyrocket, other hedge funds are going to struggle or fail to meet their margin requirements and end up getting margin called and also forced to cover their AMC shorts. Especially as other hedge funds are also likely already invested in Snapchat, Meta Platforms or Facebook, and Block or Square, they're probably already likely starting to feel the pinch of margin requirements. Guys, be sure to let me know down in the comments below what you think about the Department of Justice investigating Melvin Capital in their short selling probe. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.